me just get the figures. I'm just going to do it on this other screen, so I don't need to switch. $1 billion market cap. All-time high reported as $9.19. Is that correct here? $9.19, that's about right. That's about right. All-time low reported as 0.3. Probably down there. That's the all-time low as reported on CoinMarketCap. Thanks, Sushant. Thank you. Sushant saying welcome back. Okay. Doing volume pool on the whole range. Perfect. Most of the volume, you can see most of the volume is here. Perfect. That's what you want to see. Not too much volume in the highs. You see all that? Relatively low. That's good. The volume, this is the value area. I'm going to mark it off as well. Very high. I'll put these in just see if we see if there's any change. Point of control. It's amazing we've just left the point of control on the monthly time frame. Get rid of that now. Rename that to volume area. Okay. Let me have a look at the yearly candles. All right. So we have a yearly level there. You see that? Going to mark that off as well. Don't think we're going to go down to there, but we'll just mark it off anyway. Yeah, it looks quite good at the moment. I agree. Shushant's saying it looks like a good time to accumulate. It looks like it wants to go up. Yeah, it does. All right. 6 month time frame. There's a 6 month level here, which we've just crossed. One up there. Three-month time frame. Okay. All right, let's have a look at the monthly. There's a monthly level here, which is washed, but we're kind of into it at the moment. So it's a historic monthly level, but it's already been cleared of its liquidity, but it is there. I'll just keep it for reference because even though it's already been cleared of liquidity, it's still a level to consider at the moment. Let's just bear that in mind. One there. That's been cleared. That's basically been cleared because you can see the wick goes up into the level. And it's the next one. That's, yeah. Lower down. We have one over here. And one over here. There's quite a good liquidity levels underneath us for support. Go to the weekly time frame. Do exactly the same thing. Cleared, cleared, cleared. These are all cleared. Have a look at the daily as well. Might as well. That daily is the same place as the weekly. That will be quite strong, potentially. Cleared, cleared. These are all cleared. One there. One there. One up there. Higher, cleared. These are all cleared. There's one there, small one. One up there as well. There's a few daily levels in the way. It's all cleared. Right. There's some underneath us, but I'm not going to mark those out. It's fine. Those. All right. That's that. Next thing I'm going to do is the fib retracement. First I'll do it from the all-time low to the all-time high. It's interesting. Let me take it low actually. Let me see if this is better. Yeah, it's weirder, but the potentially, even though the reported all-time low is there, that looks like it's better all the way down to the Binance low. All right, I'm just going to ignore the reported all-time low. I'm just going to use the Binance chart. I think it's better. Just do it based on Binance. Okay. The reason why I'm doing lower, even though the reported low is here, that's the reported low there, because hold on, for some reason, right, 6.8. No, actually, maybe not. Okay, no, I won't do that. I'll use the correct figures. Sorry. It's very subjective sometimes, but I will use the correct figures. Let me just put them back in again. Sorry. 19.19. And the low is 3. Okay, that's the correct figures. No problem. King Dong was asking, when is alt season? Now. Now. I'll tell you. Actually, I've done a video on when alt season is. If you look on my channel, I've done a video on that. I think it's in the blue section. Let me have a look. It's in learning to trade. I've got a 4-minute video which says when is alt season, conditions needed for alts to moon. It's about a 4-minute video. I basically go over it, so you could have a look. All right, this is the fib based on log, and what I can see is there was some kind of 5 waves here. One, two, three, four, 5. It's a lot easier to see on the higher time frame, I think. Look at the monthly time frame. It's a bit messier. It's not technically correct, because if that was the 1 and you have a 2, you have a 3, then the 4 shouldn't come underneath the 1, and then that would be the 5, but it does. It comes underneath the 1, which I don't like. I don't like that. I don't really like that. So let me see why. Let me just try and find out what's going on. 1, 2, 3, 4, 5. I don't like the 1 being up there. I prefer it to be here. It doesn't look great, but I prefer this. So it's a funny correction. You almost have an A, B, C like that, and then you almost have an A, B, C like that. And the reason I prefer this is because in Elliott waves, the 4 can't come underneath the 1. So if the 1 goes all the way up, if the 1 goes all the way up there, then that doesn't work, because the 4 is coming underneath the 1. So that's telling me the 1 was much shorter, and then that would make sense, because this wave 1 should only have 5 waves, and I can see 5 waves. 1, 2, 3, 4, 5. That's 5. If you go up further, that's like 6, 7. That doesn't make any sense. So potentially that was your wave 1. Then you had this funny correction where it goes A, B, B, the B overextends, and then you have a drop all the way down to the C. That's when your wave 3 begins, and you kind of have like a little bit of a 5 wave up. 1, 2, 3, 4, 5 to the 3. Then you have this kind of prolonged A, B, C, which the B actually made a new all-time high, and then you had this M5, which was at the end of the Bitcoin bull run, and then it just went down. I do prefer that. But let's see. Let me just use this idea for now. So this whole thing from the 5, which is there, So in my mind, I'm thinking to myself, then this whole thing becomes the one. The one is from this low here to the 5 here, not to these highs. To that. That's what I'm thinking right now. Like a really weak 5. That makes sense, and I'll tell you why that makes sense. Because the 3, according to this, it looks like the 3 is shorter than the 1, and the 3 is shorter than the 1, then the 5 can't be longer than the 3. So the 5 becomes a weak 5. If the 1 is the biggest and the 3 is not the biggest, then the 5 can't be the biggest. It can't be, it ends up being the smallest, and that would make sense. And because you have this big 1, the 3 is shorter than the 1, and therefore the 5 has to be shorter than the 3. And then the other thing is that the 4, which is here, can't come underneath the top of the 1, which it works. This works, right? So this count works. So let's just go with it because it works. Read it now. Now that we know that that count works, I can pull it back up if I want, just to see. See? So if that's the end of the 5, let's see if we can find out that's this correction. A, B, C. Potentially we have 3 ABCs, so a WXY. 1, 2, 3. It's really weird, but you've basically got ABC there, A, B, C there, A, B, C there. Let's go with that for now. Let's see. So that's when you began your impulse there. That's in October. That would make sense. The first impulse, a little bit of correction, and now we're in the wave 3. All right, that's kind of what I'm seeing. So if that is how it is, then on the higher time frame, if the 1 starts here and it ends here, and that's where the 2 ends, and let's see. I'm just making this up for now. This is the higher time frame. So I'm just making this up. All right. Just making this up. Just ignore it for now. So look at this. The other fib pull that I'm going to do is I'm going to do a retracement from the all-time high to the bear market low, which is that's the bear market low. Okay, this is interesting. So from the all-time high to the bear market low, the bear market low, I mean the bear market low. you can see that this 236 has been kind of acting as resistance, and now we're kind of back into it again. You've got the 382, you've got the 50% of the range, you've got the golden pocket here, you've got the 786, obviously the 886, and then back into the all-time high. All right. If I match that with the other fib, that's from this all-time low to the all-time high. You can see that we've come into the 786 and it looks like we're back above this. So we've come, it's been a very deep correction, very deep, back into the 786, and we're into the reverse of the golden pocket now. We're basically trying to leave it back over this 236. We're still into resistance, but we're trying to get back above this 618. This 618, and then it will probably go up quite quickly to the 382, which kind of lines up, doesn't really line up with the midpoint. Anyway, let me just keep those for now. The other thing I want to do is there is a trend line from that point to that point. Have a look at the GAN as well. That's interesting. See, the 2-1 looks okay. Resistance, got through it, support. The 3-1 kind of lines up with this outer trend line. So there is resistance to be had, huh? Somewhere here. I like the volume coming in. That's really nice. I think you might be right. This might still be in some kind of accumulation, but that being said, on the local time frame, we're back above this previous high here. I'm looking at the weekly time frame at the moment, actually. And this is quite impulsive. That's your 1. Don't really like these. There's no real wave here. I can't see a wave. And this that ends there. Does exactly the same thing. Your 1 is to there. And correction. 3 and 5. Okay. So that's your 1. This is your correction. So we're in the 1 of 3 right now. We're back above that previous high. I mean, there's a trade to be had here, to be honest with you. With a pretty easy invalidation. It's just that previous high. I mean, ideally you want that would be your invalidation all the way down there. But because you have this previous high, which should act as some kind of SR flip, this whole price action here is like a V-shaped recovery. Yeah, it's a V-shape. So you don't really want to lose this previous high now. That should offer support. So there is a trade to be had here, just on this local time frame. And if the price is now going to go up, excuse me. There's a trade here on the table. It's called the bump and run. Okay, let me show you. Bump and run. Let me do it on this chart here now. It might be better to just trade the bump and run, actually. Pattern. This is showing bearish, the bearish bump and run. Can I find the bullish one? It's the reverse, really. Let me look at images. Let me see if I can find it for you. You've always got the bearish one, but it's the bullish one that I'm interested in. It's the same thing, it's just reverse. It's like this one here. Bump and run reversal pattern, yeah. Copy image. Potentially you'd wait, actually. If there's a bump and run on the table, which I think there is, you'd potentially wait. So Shushan is saying even if it comes lower than 0.9, isn't it going to make a cup and handle? Oh yeah, on this local time frame, yeah. Cup and handle. Yeah, there's a little cup. I don't want it to come underneath this level, this SR flip. I'll be honest with you. I don't like that. I think that should offer support now. And I wouldn't enter. If the price came underneath here, I wouldn't long. I would wait for the price to get back up the SR flip. I wouldn't do that, just because it might be a cup and handle. But who knows? You just don't know. You just don't know how low it's going to go. And so you're not going to long into weakness. You're going to long into strength. Strength would be holding this SR flip, and strength would be, if you did lose it, to reclaim it. Okay, so that's the idea. You have a very easy invalidation because you have this previous pivot high. You can see here clearly for 3 or 4 days it offered resistance. So now you want it to offer support. That would be an SR flip. I wouldn't trade a cup and handle if we lost that SR flip. No way. I'd wait for a reclaim of that SR flip if we went lower. Okay, so the bump and run is this. Hold on, let me show you. Forget about the historic price action of Bitcoin. The idea is the same. You have this, see that, and then it just falls. So you have the same thing here, and it just falls. And so we're potentially in this kind of bump phase. And potentially you'll kind of come up, hit that line for the 3rd time, break it. Now the thing about altcoins is that you might not get a retrace once you break that line. Yeah, if you do come back, then you take the break. You really would take the break, and you have an invalidation. According to this, chart. This doesn't actually tell you where the invalidation is. The thing about this this kind of trade, technically your invalidation is going to be all the way down here. Let me see if I can find the better one actually. They got good ones for the reverse, but they don't have good ones for the bullish one. Let me just have a look at the reverse. But this is not bad. Let me see if I can reverse it. Huh? Can I reverse it? Does it let me? No, probably not. Can't rotate it. No. Look, this is, I mean, basically it's, you see that angle? There is a trend line here which was broken from here to here. See that? That's that 53% degree. And then you have this one. So potentially you've actually broken that big one. Look at this, huh? It's very messy. Something like that. That's there. And the trade is the run, not you wouldn't like preempt it, but I mean I like that we're on an SR flip now. You are preempting it. You're preempting it. But that's the trade. Now you have a trade, but you'd have to take profit here. Okay? Because you could potentially, let me just have a look at these. You've got a GAN fan here. And even though I've got that trend line, actually the GAN is more accurate. But anyway, let's just leave that. That's fine. There aren't really many higher levels, so we're into like this monthly level here. I think I would wait. I think I really, honestly, even though this is probably going to go up and it doesn't look bad, especially because of the volume that I did and the EW, we're potentially in the wave 3 now. And also the volume area, we're above the point of control. But in a higher time trade, really, your invalidation needs to be underneath this POC pivot right now, here, just in case we do go down. And even if we do go down, I don't think it's going to happen, but you have this SR flip, then you're coming into resistance. I think the strategy probably would be to scale in, but actually the trade to be had is breaking this outer line. I think, did you see this outer line? That's the bump and run. I think there's a bump and run trade on the table, and I don't know how we're going to get above this. Like, you have a weekly level here, there. That's kind of what you want. And then that's the trade. And then you're going that you've cleared this outer trend line. You're into liquidity levels, but because you've cleared this outer trend line, I think that's it. And then you've cleared this weekly level as well. So that your invalidation should be something like that. And potentially it could run. It could really run. it's not going to be a straight line either, because you have all these levels in between. And then also if I was to take the fibs, like here, look, the 50% comes up to this weekly level there, and the value area high is lining up with the golden pocket and this yearly level. That would be your take profit, somewhere up there. All right. I don't think there's going to be much volume resistance because I did that volume pool before, and I already showed you that most of the volume is in the lows. There is, just because most of the volume is in the lows, there's still volume in this higher range. And the issue is always the same, that liquidity, all of this, even though most of the volume is in the lows, all of this liquidity still has to be cleared. So anyone who's potentially trapped in this down move, and how far did it pull back? So roughly 80%. I'll be looking to exit at break even or something like that. So I really think that probably in the golden pocket will be your big TP, and I think I would wait a little bit more. I don't know, I mean 20%, you have to wait 20%. You'd have to wait for this outer line to break, and that would be your bump and run trade, and you'll have a pretty good invalidation to the golden pocket. You're looking at a 1 to 12 risk to reward trade. Take your profit. You can put it back in, or you could just let it run and trade it all the way to the all-time high. Back to the all-time high. That's a 1 to 45 trade. And then if you're looking at price discovery, you can just, in the first instance, without doing a trend-based fib extension, you could do just a normal fib extension from the all-time high to the bear market low. It's just this one. You could just do a extend, and then you're in the most bullish circumstance, you're going up to these higher numbers, probably $20. So if you're looking for $20, I don't know if it really makes any difference if you wait for this outer trend line to break, coming in at $1.2 or coming in at $1. I don't think it makes much difference. Even though there is a difference, it's about a 20% difference. That's not how you're evaluating the trade. The trade is a break of this outer trend line with a small invalidation. You're coming in a slightly higher, but you have a really clear invalidation, and you're not expecting this now. That's not what you're expecting, because you've just broken that outer trend line. Now, does it have to go straight up? No. It could kind of, it could do that, or it could go back down to test and go up. Or, because this is crypto and these are altcoins, it could just go up. All right. And that's safe. That's really safe, because you hit that outer trend line and this could just go back down to the POC. And you still have a bump and run, but then you're much lower. Then it's like that. Then you're entering much lower. Does that make sense? And we have to see what happens. I think the safest trade, just because we have this outer trend line, I think the safest trade would be to wait for it to break. Yeah. All right. That's my idea. And as a trader, I would wait. As a long-term hodler, look, you're buying above the point of control, and the point of control is 20% lower. So you have to have a dollar cost averaging strategy to accumulate if the price goes up and it comes back down and it goes up. Like you're right, it is an accumulation range at the moment, and you can see how much volume is in at this range. And so you could start dollar cost averaging with the view of breaking this outer trend line, whether it happens slightly higher up. If it was to happen like in the current time frame, then it's much higher. You're going up like that. You're coming in much higher, like 40% higher. So no one can predict when that trend line is going to break. There is an outer trend line. You see it clearly. All right. So that's my idea of this. And then Sushant is saying, how do you sell your coins? Do you think all the alts are going to break previous bull run all-time high? I think it's likely that a lot of them will. And I think a large portion of whether they do or not will be to do with how much trapped liquidity is in the higher ranges. Yeah. So clearly you can see here there isn't much in context. The context is the overall range. Okay. Now, there are some tokens where when you do a range pool, you'll see that there's a lot of trapped liquidity. And this is more like this. It's like this. Yeah. And so when you have a token and you do a full volume range pool, unless the problem is this, if this was the volume profile now, as the price goes up, you're going to get sell pressure. And also the other sell pressure would have been people who have longed in this lower range, and then they're up 5x, 6x, and that's good. You know, that you made 500% on your investment. That's pretty good. You know, like you can't complain about that, can you? And so you're going to get two types of sell pressure. You're going to get the trap liquidity sell pressure, then you're going to get the TP, the take profit sell pressure. So with certain coins, if they don't break their all-time high, two things can happen. You can either make a lower high on the monthly time frame, and then you could be forming some kind of higher time frame triangle pattern, who knows, where in the bear market the price will go down, make another higher low, and then the next bull market you could have a break. Or that with this token, that would be the worst case scenario, because you've already made a higher low. This whole thing is a higher low. That was the lower low, that was the higher high. With a token like this, if you break the all-time high, you've made a higher high. Yeah, because this is the higher low. That's the all-time low. That's the all-time high, which is a higher high. This is a higher low. And so the confirmation for the bulls would be a higher high. That's really where the price can go up rapidly. In price discovery on a higher high, the price will go up, flip the all-time high into support, and then you're pumping, potentially at coinciding with alt season. Yeah, but at the moment we're just like, yeah, at the moment I think you have this outer trend line. I think there's an easier trade to be had, rather than, even though I said to you right now you could take the trade. The trade is this SR flip, previous high. Yeah, there's a very easy trade to be had right now. I wouldn't go all in. I would just risk a percentage, and if I see your hard stop is here, excuse me, that's your hard invalidation. That's to protect yourself against the black swan. Yeah, you'll lose if there's a black swan. You'll lose 22% if there's a black swan, because that would be very weird for that to happen, but you have to protect yourself. But really the invalidation is much higher up. You don't want to see the price closing on the daily time frame underneath this SR flip. Yeah, then you could just close out you could just wait. You will take a small loss from the current price action, potentially about 4 or 5%, okay, on your risk, and wait. And then it'll be easy to see strength again, because then all you have to do is see the price come back above that SR flip, and then you could re-enter with a much smaller hard stop, because then that would be very weird for the price to then do this and then go back down. It would be very weird for it to do that. It would be unexpected, and you'd have a much tighter hard stop. So at the moment, if you're going to trade this, your hard stop is basically underneath the point of control, underneath this pivot that's been put in, but you actually have a much tighter invalidation, which is this previous local high. And if the price starts to come back under, I wouldn't like that. I wouldn't like to, even though it could form a cup and handle, which is what you identified that correctly, but I wouldn't like that. I don't like that. If you're long-term accumulating, accumulate. It's not a big deal. Just dollar cost averaging. I've always said this, just dollar cost average, buy a little bit every day. Who cares? You're in the lows. This is a nice range. There's quite a lot of liquidity on this token. I was looking at it. It's a $1 billion market cap. Let me just pull up the market, the volume on the last 24 hours. If this shows on Binance, it's $10 million on Upbit. I don't know what that is. It's $11 million. So a daily, per day, you're looking at about $25 million across all the exchanges. So it's okay. Yeah, it's okay. And potentially we are going to form, let me just get rid of all of this shit now. Potentially, if we are going to now do a higher time frame wave 3, that was your wave 1, this is your wave 2, this is your wave 3, then, you know, this could expand further. Who knows? Or let me just clear all this so it's clearer for you to see. Get rid of these trend lines now. And get rid of this EW. There is, I mean, there's also like this, you know, channels are very subjective. I like channels, but they're very subjective. Don't know if there's a channel going on here. Don't know. It could be there could be like a channel. I don't really like the steep ones. I prefer the shallow ones. Is it to there, or is it to there? Could it be to there? Are we now trying to get back into this? See, from the all-time high to the all-time low on the top two of these two pivots. It's a bit messy. Could we be trying to get back into this channel? Is there a channel here? Will that coincide with this trend line that I have? Not that one. That one. Get back in there. Go up. I think for most people, they feel a lot safer clearing all the resistance and just buying into strength, and just then that's when the price really pumps. So I think for me, this kind of price action which would be more favorable. I don't have to guess then. And then the other thing is, but I don't know about the timings, because at the moment, let me just try and do, all right, this is going long. I'll stop this quickly. But you've got a trend-based fib. What was the EW count again? I'm doing it on the weekly time frame. Let me just get rid of all these corrective ones. I don't want those. I just want the impulses. Okay. I'll do this trend-based fib on the weekly time frame. That's interesting. So the 1-to-1 of the correction. So I've done it from the 0 to the 3 to the 4, and the 1-to-1 has landed perfectly on this low here. You see that? I mean, the fib time is an area. It's not exactly one day, but you can see that the low has been put in on the 1. Okay, so from here, which is the 0, all the way to the 3 to the 4, that's my fib time trend. And roughly, I mean, the 618 is put in a little bit of a pivot slightly afterwards, but what's interesting here is that the 1, and so the 1 is basically the distance from 0 to 3, from 4 to 1 is the same distance, is put in a pivot there. Okay, and what's interesting is almost we have a pivot on the 2 here. See that? There's a little pivot on the 2 there. This is nice. I like that. I like that the pivots have been putting on the whole numbers on this 1 to 3 to 4. That gives me more confidence I have confidence, a little bit more confidence now that this is the pivot. This pivot's been put in. Okay, similar to this pivot here, and you see that pivot wasn't taken out by this price action. That's a higher low. You see that? That's a higher low. Okay, and maybe that's your 2 ending, actually. Maybe that was your 1. I don't know. It doesn't look right, but maybe that was your pivot and that was your 2 ending. Okay. And somehow maybe that was your 1. And that's your 2, and now the 3 is beginning. Okay, I like that the fib time is lined up the pivots correctly. I think it's quite interesting. That came in on the week of January, the end of December, January 22, and the most recent pivot has been put in here end of January, like roughly at the end of January. That gives me confidence. You don't expect now the price to go down and take out that pivot. That would look wrong. On a higher time frame, your trade is actually it's got a much wider invalidation. If you're trading a higher time frame trade, maybe up to the top of that channel, huh? On some kind of, when does that land? February, yeah, February the 25th. Let's get up there. Does that line up with some kind of fib? Yeah, there you go, right there. Let's get right up into that pocket. September the 24th. Could it go higher? Could that be it? Yeah, that could be it too. Doesn't have to be that. that's the whole 3. Will that peak? Yeah, it possibly could peak there. Yeah, all right, that's something to bear in mind. So he's asking a question. Market cap is more than the previous bull run, but price is still low. Well, the reason why is because they've printed more tokens during the duration of the bear market. Yeah. So looking at coin market cap, looking at the supply, circulating supply is now maxed out. So obviously what happened was that in the previous bull market, not all the coins were released, and during the bear market, all of the coins are released. That's actually quite bullish. So they've been printing coins, which brings down the token price, but even though the market cap is higher. Okay, I think the printing is ended now, because I'm seeing now that there's no more. Total supply and circulated supply are the same. 1,082,860,679 KAVA is the same on total supply and circulated supply. And probably what happened was that for the duration of the bear market, they were printing more coins. Okay, so that's actually quite bullish. That's a bullish development. Yeah, this is, I mean, look, you could I think it's a good place to accumulate. And if you're thinking higher time frame, you're still looking at a 1 to 63 trade with a wide stop all the way down to this pivot that's put in at 65 cents. You could start accumulating, but you have to have a plan to accumulate if the price does that, you know, like. And I think that this, with the bull market, the whole idea of the bull market is you just buy the dips. You dollar cost average into all the dips, and your take profits are the big take profits. You don't take profit along the way. You're looking for the big take profits, and you take profit at once at key higher time frame levels. So even though there's lots of arbitrary levels in the way, which I've marked out, the reality is that you've got, there's like volume area, you've got the value area high, that lines up with this other fib that I pulled from the all-time high down to this this bear market low. That lines up with the golden pocket. That's your big take profit. And so effectively, the strategy for most people, the safest strategy is to keep on accumulating the dips until you hit your target. So every time it dips, let's say the price dips, you buy, dips, it buy, you buy the dips, you keep on buying the dips. You're not taking profit until eventually you take profit. Yeah, that's the strategy that most people should be deploying. And then again, you're doing exactly the same thing. You're dollar cost averaging into the dips until you hit the next big take profit, probably the all-time high. Who knows? Whatever your plan is, everyone has their own plan. And then that's your next take profit. That's the best way to just approach the whole bull market for most people. Yeah, I wouldn't necessarily recommend people to trade, because it's not easy to trade and most people don't know what they're doing, because the number one rule for trading is risk management, is managing your portfolio. That's more important than anything, and most people don't know how to do that, and most people want to get rich quick. So I don't recommend it. I think it's just a lot safer to just buy the dips, and then at key higher time frame resistance levels, take your profit, 50% at least. And then if you want it, if you're still bullish, you can continue to dollar cost average into the dips till the next big take profit, and then you can just ride the waves, right? That's kind of what I think is the best strategy for most people, right? So that's KAVA. It looks like a mess, but it's not really. There is some sense to it. I'll leave it and see what happens. We can come back to it in the future. Remind me and we'll come back to it. All right, and I'll just hide these. I'll leave that long position. We'll keep that trend line. And actually, you know what I'm going to do? I'll keep an eye on it. I'll come back because I wouldn't mind taking this bump and run. Bump and runs can be very profitable because with a bump and run, it could do that really fast. They can be very good trades, these bump and run trades. You have a really small invalidation and you have a really nice risk to reward. You can risk 1% and you can walk away with a 22, sorry, not a 22x. Yeah, you risk 1%, you have a 1 to 20 on your risk. It can be a very profitable trade. All right, I'll section that. Right, who else is next? Craig. Craig's been waiting for a million years. Sorry, Craig. Do you want another break or should I just go straight into it?